Saenz with JES Financial. Hey Jesse, how's
it going?
How
you doing, Dena?
Good, good. How are you today?
Doing well, doing well. Appreciate you having me here.
Thanks for coming. I appreciate it. Just wanted to, I always like to start with a little bit about yourself personally so people can connect with you, and then we'll go into your
You got it. Well, first of all, Jesse Saenz. I'm Houston born and raised. Went to University of Houston, go Cougs, of course. Did spend a few years in Chicago right after college working for a financial investment company, kind of like David from before. That was a great couple of years in Chicago. And after the first crash in 2001 of the markets, I actually came back to Houston and started working with a bank. And that's where I got an insurance license, got into the banking industry. Still had the investment background, but of course the banking industry was completely different in 2000. So it was definitely very exciting at that point. And then that took me on to working with other investment companies and other investment advisors.
All right. So tell me a little bit of how the insurance world has evolved in your world.
Oh, you got it. And actually, I'd start back with insurance has changed so dramatically, but that can be said every single year. Going back to what it was before, I wanted to focus that in the past, insurance was really specifically focused on either you used it or you lost it. And that was the main thing. A lot of people have heard that kind of saying, especially when it comes to insurance. So what I've been focusing on over the last few years is some of the solutions where if you don't use it, shouldn't you get something back for that? And so a lot of clients were very excited about being able to use something, but if not, I'm able to get something back for it. So that's been really big in the industry, and that's probably one of the biggest things that's changed in insurance, because now you're seeing that sometimes even with car insurances, that you'll get something back. That happened over the last couple of years when we weren't driving our cars. But you're starting to see some life insurance as well. Long-term care, you're starting to see that with insurance and supplemental insurances. So I focus a lot on the cancer and the heart insurance. So a lot of those supplementals, they actually give you that money if you don't use it. So I've been focusing a lot with that, especially when clients are kind of worried, what happens if I don't need this? So that's really changed a lot of clients' minds recently.
What type of people do you think should be looking into, that type of coverage?
You got it. And I would start off with the supplemental insurance that I work with, like the cancer insurance and heart insurance, because specifically, it's very expensive when you get sick with something like that, especially when cancer comes around. So something like this is going to pay money to you as you go along once you receive that. So I always say anybody from 35 to 55 that has a history of cancer in their family, it is good to get something supplemental like this, because what it does, it pays money directly to you when you get sick, but if it doesn't, it pays it back to you. So a lot of people like that. I know that I'm going to be spending this amount of money per month. I know that a period of time I'm going to get that back. Now, if I get sick and it costs a lot extra, I'm covered with that, and that's why we have insurance. So right now, young people, especially because it's something that you have to qualify for, that are in fairly good health, but I've also seen 50 to 55-year-olds really specifically be able to utilize this, because in 10 years, they're going to get their money back if they haven't gotten sick, and plus they can keep the policy as long as they keep paying. So it doesn't necessarily just go away. So on that part, we're looking for clients between 35 and 55 because of the return to premium.
Okay. I mean, how are you able to give people their money back and all these question. Other insurance companies aren't, I mean, yes. What's the difference?
You bet. And with Family Heritage, I do cover, as a independent advisor as well, I cover multiple types of insurances, and one of them is Globe Life Family Heritage. And they started with Family Heritage back in 1987, just giving some cancer policies, but what they did is they didn't spend money on advertising. They actually worked grassroots up. And in that aspect, they were able to say, hey, we're able to give you that money back. And so that became something that that no one else had done. And then finally, Globe Life saw something very beneficial in that, so they purchased Family Heritage. So now they have a huge name with Globe Life, but they still have the small mentality of, hey, a small investment company that can give something back. So it was actually a really good thing about 2 years ago when Globe Life purchased them, because now they have all of the promotions for it, but yet they don't have to give up that return of premium. And so basically they just give the money back to the clients.
That's awesome. So it's heart, cancer.
Heart cancer, also accident as
Accidental.
well. And you know what? Those are the three main things that happen to us. Number one cause of death is cancer and cardiovascular. Second is cancer, and third is accidents. So we focus on those three. And the best thing with something like this is you partner it up with one of your insurance policies that you have with your insurance agent. So what I do is also consultate, do you even need this or not? Be one of those things, because a lot of people don't understand how the supplemental work. So what we want to do is make sure that we make it simple and also give them something back in case it doesn't be needed.
So what would accidental cover?
Accidental, actually, I would say that for a lot of my friends that have families out there, including yourself, especially because any trip to the emergency room would have some cash paid out to you immediately. And I don't have any kids, but all my friends that do, you know, that's one of the things that they worry about the most. And if they know that they can go and they're getting something for that happening, families do utilize that a lot. And the great thing about one of this is it's not going to count how many children you have. So if you have one or if you have four, it's still going to be the same amount as if you were paid for that. So there's some good prices on there.
Okay.
Yeah.
So how could, you know, your insurance help you with like long-term care?
That's one of the biggest questions coming up now, because long-term care, and I do want to transition from the supplemental to the long-term care because that's on a lot of people's mind currently. In the past, it was a use it or lose it type thing. I'm either going to go into this nursing home or it's going to go to the insurance company. What we're seeing today are a lot of insurance companies providing the ability for you to have capability of getting that long-term care that we much needed. If you look today, I just did research and it's over $4,400 a month just to be in a nursing home.
Wow.
And so when we look at that, that's starting to drain some of those older clients' savings.
Retirement, yeah.
Retirement, exactly. So if we can put a long-term care policy in place for something like that, we're not taking money from our savings from that. But then the problem happens if we pass away before that happens. Oh, I don't want it to go to the insurance company. So there's companies now that are allowed that to go to beneficiaries. And so the biggest thing that we've seen in the past is that they'll give you long-term care, but we're going to tell you where you need to go, meaning you're going to have to only go to A, B, you won't have C or D. And we're going to reimburse you. So you still have to come up with the money, and then we're going to reimburse you after a time. We're seeing these long-term care policies now have a cash indemnity, meaning that we're going to pay you the cash, and you decide how you want to be taken care of. Fortunately, we have a family member that's going through that right now. She's going to have to worry about having somebody 24 hours a day take care of her. So this would be something that say, you know what, she doesn't want to go to a home. She wants someone to come to her house. And so that gives her the opportunity to say, I'm going to spend my money the way I want to. And so that's what's changed a lot over the last few years in long-term care, also supplemental insurance, is that they've given a lot more wiggle room to the customer, becoming a lot more customer friendly. So when I talk to somebody now, it's not a use it or lose it any longer. It's use it or, hey, get it back if you don't use it.
Even with the long-term care?
Even with long-term care.
Okay. That's...
So there's some policies that have that. There's some that don't. So obviously we look at which ones that do. There's also some policies that can combine a husband and wife, a spouse, a couple spouses, that one has a 401k or an IRA and one doesn't. You can actually put that together and have them both pay for the long-term care based on that. That's all reimbursement. There's different things that you can do to make that beneficial for both parties. So a lot of good things that are coming out now, but it's so much different than we just seen 4 or 5 years ago.
So JES Financial, are you able to, I mean, it's kind of like a broker in the sense that you can kind of pick and choose which companies you pick from and which ones that you're able to, you know, get coverage for your clients?
Oh, similar to the Goose said a little earlier with Emily, I have a chance to look at 30 plus different types of insurance companies and really shop what some of the best opportunities are for you. So that in itself is important to a lot of customers. And knowing that each year that we can look at that and see what's best, they feel a lot more comfortable knowing that I'm going to give them the best opportunity because we're going to look at it all as well.
I know you mentioned earlier to me something about leaving the money tax-free to beneficiaries and stuff. How does that work?
Yeah, on that last part with their, basically when people have money that is set aside, of course we have to worry about leaving money to beneficiaries and then paying taxes on it. So with insurance, you can wrap that together, have something that you can utilize while you're alive, but when you pass away, that money's going to go tax-free to your beneficiaries. It's because it's wrapped in an insurance protection. And so what it does, it allows it's what is called, and a lot of people are like this, and like, no, I'd love to leave money to my kids, but man, should I be able to use that myself? Don't I want to use it for myself? Well, that's what happens. They get full control of how they want to use that money. But if something happens to them, it goes to their beneficiaries and it bypasses the taxes because it's an insurance protection. So those three things, going back to supplemental insurance and going back to long-term care and leaving money to beneficiaries, are three ways that it's not a use it or lose it anymore. You get a chance to find what's going on and actually be able to utilize what you said you were going to do. And none of it goes to the insurance company.
How do you find insurance protection changing retirement plans?
And that's huge, especially working with David. I do work with David a little earlier from your earlier segment. But how it's changed is that it's actually, you can almost put the extra worry on the insurance company. They're going to start protecting you on when it comes for income, when it comes for leaving money to beneficiaries that we talk about. But the biggest thing is that, am I going to run out of my money? So what I do is I work with David, and then we find the right particular type of income for that particular person. But the insurance is changing it because it's guaranteeing that income now. It's going to guarantee you're going to get something for the rest of your life, but sometimes it'll guarantee it for a secondary life too. So it's changing retirement income because it's now giving you some peace of mind and saying that I'm going to have this income for the rest of my life no matter what. And insurance helps put that together.
Awesome. So you just kind of like, that's the whole purpose. Like you partner up with people, you can protect your money, protect your beneficiaries, protect everyone.
Exactly.
And kind of get the biggest bang for return on your money for, whatever you're investing in, whether it's the insurance coverage or your financial planning or anything else.
Correct. And it goes perfect with, real estate as well, because they're always asking that type of question, what's a better way for me to incorporate my entire portfolio? And that includes your house too. That includes a part of your overall retirement.
So you got to understand that you also need to partner with multiple people to make sure you have the best coverage in every aspect of your life.
That's right.
So awesome. Well, thank you so much for coming
it.
on the show. I appreciate it. What's the best way that everyone can get a hold of you?
Cell phone is 832-567-8404. You got JES Financial 2020 at gmail.com. Two of the best ways, and Facebook on there as well.
Awesome. Well, thanks again for
Appreciate
coming on the show, and thank you for watching today. I really appreciate it, and thank you again to Now Media TV for having us. We'll see you next week.